Welcome back. Our first conversation has to do with loan sharks, or what they call digital money lenders. And some of you have had that experience, and it wasn't or hasn't been a very pleasant one. So what exactly is this, and why do they deploy some of the techniques in their recovery process? And why do people still head there to get loans from these loan sharks? That's exactly what we'll be talking about. Being joined on the program by Muyiwa Jimmy, the CEO of Consumetrics. He joins us via Zoom. Thank you so much, Muyiwa, for coming on the program.
Morning. Thanks for having me.
I will also have a legal practitioner and national coordinator, advocates for people's rights and justice, joining us from our Abuja studio, Mr. Victor Giwa. Mr. Giwa, thank you for coming on the program.
Yeah, good morning. Thank you for having me.
Gentlemen, I want to come to both of you at the same time. Maybe I'll start from Mr. Giwa, and then Mr. Ayojimi can take it up from there. Naturally, if you're heading to a space where there's hostility and you survive that hostility, you will put some level of caution in heading in that direction another time. But when it comes to loan sharks, despite the recovery techniques we've seen in terms of harassment for the people who are owing them, people still head back there to get this low credit facility. What do you think is going on?
Well, thank you very much. I was thinking you were going to ask Muyiwa first because he seems to be in the field. But
let me go to Muyiwa.
Answer your question.
Since you want that, let's get to Muyiwa.
All right.
Since he's the expert, consumer. Yes. Mr. Muyiwa, I guess that question is for you now.
Delivered credit is, it has expanded a lot in Nigeria today and within the financial space. You will find that it took its root from the pre-post-COVID era, where people needed to, over time, get small loans, to augment some of their business concerns. This digital loan has been driven by very, very strong customer demand. So there is a demand. Today we are saying that there is high inflation, put at about 31% or thereabout. We're saying that, the level with which people can access even credits in the brick and mortar banks, is not only difficult right now, the hurdles is enormous. And so what do people need such loans for? You see things as easy as I won't call it minute, but as important as augmenting fees, school fees, augmenting rents, augmenting hospital bills in some instances, would give room for people to still keep going back to them. And that's what you're saying, that why, despite the fact that the sharks, out there are about their recovery in some manner that it's, call it unprofessional, you still find out that people return back to take some of these soft loans. And again, we will keep seeing that because research has shown that people who have borrowed funds within that period, put it 2019, 2020, down up till now, when the digital credit industry really started to boom, still find it very convenient. They don't have to sit in front of anybody. They don't have to have physical contacts, because some people attribute borrowing to something that is some people are borrowing shy, but they are shy in borrowing funds, So we will still continue to see an increase in that. If you look at what the CBN in terms of the monetary policy rates has come up with, today, lending rate is about 27+%, right? That has risen from the 14% in December 2023. So we will continue to see an increase in digital lenders, whether we like it or not. As a matter of fact, some of the conventional banks today as well have devised means, to be part of that stream of income as well.
Let's now head back to Mr. Muyiwa. I guess Mr. Ayojimi has laid some basic foundation you can respond to, because if you're defending the people, I'm sure that they will say to you why they do the things they do. So maybe your first take on the question I asked.
Yes, thank you very much. I just wanted him to give us some. But basically, in answering your question, the reason why people still patronize some of these digital lenders is very simple. Firstly, we have a dysfunctional system. Two, people don't obey simple laws. And thirdly, the government has failed in its regulatory function. Now, what do I mean? I said, first of all, we have a dysfunctional system. Normally, what you should do when you need, why do people go in the first place to get a loan? It's because they just need something to augment their livelihood. I am a salary earner. My salary in salaries in Nigeria is paid almost at the end of each month. For example, 28th, 29th of every month. But for government officials, sometimes they owe you 2 to 3 months salary. So, and people now revert to somebody who could give them loan so that they can sustain they can sustain their livelihood. But where will you get this loan from? When you go and approach a bank, your bank, you have an account with a bank, and you say, look, I am a salary earner. I earn 100,000 a month, but for the past 3 months, and I work with a government agency, but for the past 2 months, I've not been paid. I just need you to give me 50,000. Let me just buy some, some things in my house, Bonvita, soap, shirts, to just take care of my basic needs. No bank will give you that. In short, when you want to take that kind of loan, they will even tell you to bring the whole house you have. They will tell you to even bring the car you are using to take to work. They will tell you to bring your mother's certificate, your late mother. And so there is no functional system. So the only way people can revert to, the only means they can revert to sustain their livelihood is to go back to these digital lenders. People who will say, oh, come and take 100,000, and in 1 week you give me 200,000. Or come and take 100,000, and in 2 weeks you give me, or in 1 month you give me 200,000. People fall into those digital lenders because of the fact that there is no functional structure. If I know that I can approach my bank, or if I know that government has a facility that I can ask for 100,000, or I can ask for 50,000, and the money is given to me, I won't patronize digital lenders who are giving money not because they are interested in your livelihood, but because they want to make profit. So if we go into details, you will see that the digital money lender are doing it for the purpose of making profit and not for the welfare of the citizens or for the welfare of the customers. Normally, when people ask for petty loans, you should look at the welfare. What do they want to do with the money? They want to buy their normal groceries. They want to buy little things to take care of their family. They want to buy baby food. They want to pay maybe their monthly rent, or they just want to add money to the money they have to do a particular thing, which is usually for a very short time. But for God's sake, which of the banks will give you that kind of facility? And so that is the reason why, irrespective of the harshness, irrespective of the difficulties, irrespective of the punishment imposed by these digital lenders and embarrassment, people still fall back to these same digital lenders.
Well, At the level of regulation, reports say that the CBN has approved, license for as many as 160 of those banks. And if those reports are true, some of what you have spoken to now, sir, that you get loans for 100,000 and you are supposed to pay 200,000 naira back. Do we see regulation in that digital lending space to protect the interests of those who are seeking those loans? You can answer that, and then we'll also go to Mr. Muiwa.
Okay, firstly, I would tell you that digital lending falls under money lenders' business. So in money lending, we have laws and regulation that regulate money lenders. For example, we used to have the Money Lender Ordinances of 1927, which was adopted from England. But after some time, the issue of money lending now fell into the concurrent list. And so what we have now is the money lenders law of each of the states. So Cross River State has its money lender law. Edo State has its money lender law. River State has its money lender law, and each of the states like that. So to begin with, there are regulations. For you to be a money lender, whether you are a digital money lender or whatever, you fall under the definition of a money lender under Section 2(1) of the money lender law. And who is a money lender? A money lender is somebody who does lending of money as business, who lends on interest for the purpose of, or who gives somebody certain amount of money in consideration of a larger amount in return. Now, I am defining this thing so that you know what is the intention of a money lender. So the money lender intention actually is to give you a certain amount of money and getting you to repay it back with a larger sum. With a larger sum. Now, under the law, they are supposed to be regulated. They are supposed to give out a license. As a matter of fact, for you to be a money lender, under the money lender laws of some states, especially that of Cross River State, Section 2, 3, and 4 says that before you become a money lender, a magistrate is supposed to give you a certificate of fit and properness, that you are fit and proper, so that you don't exploit people. Because the idea of the law is to prevent exploitation of the borrowers. Because just like it is in the Bible, a borrower is a slave to the lender. So when you are lending money, the person who takes the money becomes your slaves. And in this money lending business, the lender exploits the borrower because it is presumed that the borrower has no option. And so the law was made to protect the borrower. So what happened is that government have made certain regulations. One, to make sure that you must be a licensed money lender. One, and for you to be a money lender, you must get a magistrate certificate to show that you are good in character and in disposition.
If I may come
Two,
in there,
you must also.
If I may come in there, I guess what I'm asking is, under those state money lenders acts that you have expounded upon, what exactly is the interest rate? Because as a lender, even though I'm unsuspecting, I wouldn't go for a loan that would be requiring me to pay 100% in return by the time I'm paying back. 200,000 for 100,000 is quite a lot, and it speaks to the pursuit of inordinate gain by the digital money lenders. So what is the prescribed interest rate under those state acts?
Yeah, the interest rate varies. Because it depends on, like I said, each state has their laws. And so they have benchmarked certain amount as interest. For example, some will tell you for every 1,000, for every 10,000 you borrow, you pay a 50 naira as interest. For every 10,000, 20,000 you borrow, you pay 1 naira. It depends on each of the states. But the major problem is that most of the borrowers who sometimes are illiterate in letters, who sometimes are ignorant of the law, go into this transaction without reverting back to what the law says. For example, it is an offense for a money lender to lend money above the statutory recommended interest rate. As a matter of fact, the law says that when a money lender lend you money higher than the prescribed interest rate, you are not supposed to pay that money lender because he has violated the law, and that contract become unenforceable.
So there's violation on
against the borrower.
So there's violation on both parts, both on the part of the lender and on the part of the borrower. Let's come to Mr. Ayojimi now. Mr. Ayojimi, let's have your thoughts on the same question.
Okay, so we're talking about lending structured institutionally, either by CBN or thereabout. What is obtainable today is that you have digital loan apps that are not subjected primarily to the laws in this clime. You know, all of what has been emphasized by my colleague there is pretty much within the ambit of I'm registered with the CBN. Definitely, I have some money deposited as security, and invariably, I also have a certain level of access. Ditto for the regular banks today, which would also receive certain subventions from CBN. We're talking about private investors. We're talking about private investments. A Mr. A, in partnership with a Mr. B, having a pool of funds, set up digital apps for the purposes of lending out money. So, I mean, I think we should talk about the risk and problems associated with the digital credit system for consumer protection purposes, you know, and also highlight the unethical repayment and collection issues. One thing is clear: the lenders are in business, the lenders are existing to serve a need. Take, for example, I was somewhere in the lobby of an hotel very recently, and I was eavesdropping someone on the phone whom I didn't even know, saying that, look, I need that money urgently. Guess what? I'm going to give you, I think it was 200,000, and I will give you 250,000. It's a desperate borrower. So regardless of whether you see the terms and conditions ahead, your need can trigger your appetite for borrowing. If a borrower needs money very urgently, he can, at that point in time, depending on the desperation, determine that, oh, is that the interest rate? I'll go for it. At that point in time, a contract has been struck. So regardless of whatever the law says in terms of this is what the interest rate will be, this is what the interest rates ought to be, number one is to say that there are certain category of these lenders that would not fall within that ambit. Secondly is whenever a borrower triggers that acceptance, it means that that terms, is definitely acceptable to that borrower. But what we are saying critically, which is something which is a food for thought, and I think sometimes last year the FCCPC did a very good job of that,
right,
was the fact that they were able to say, look, unethical repayment and collection issues must be dealt with. Okay? Appropriate or inappropriate credit product packages, credit designs, must, or data privacy infringements by these lenders. And that's where they begin to send text messages all through to the contact persons of the borrower, saying so many, things derogatory to the borrower.
Well,
and so they came up with structuring, the lenders within that bracket, because there has to be a partnership. There was partnership at some point in time with Google, to say that, look, some of these apps would have to be removed.
And I know that Consumetrics, pardon me, I know Consumetrics has also done some work. You brought together some of the key stakeholders from FCCPC to the representatives of the banking sector and the rest. But just to put some more bites to that point you were making, I'm going to read an excerpt from one of those messages sent to the contact of someone who borrowed money. And this is what he says: debtor. It's not dear debtor, it's just debtor. You have chosen to ridicule yourself and your innocent family in a shameful manner, despite their non-involvement in your alleged loan fraud, but they will be fully implicated with your fraudulent decision. On the contrary, we promise not to disappoint you with our humiliating actions, as you will bear the full brunt of your refusal towards your loan repayment from now. And then he puts the name of that particular loan app. And I think this is even nice. If you look at it, there's some that they're worse. And for the people who are on the receiving end, by the way, it's an obvious contract. For when the contract is done right, if you borrow money, you should pay back at the appropriate time. That point needs to be made. But for some of us who don't know how that thing happened, all we just see is messages and calls. By the way, because they have access to the contacts, they have access to emails, gallery, and the rest. It's in the terms and conditions. What should we do? Because we're also being harmed, emotionally harassed by this. So let me ask Mr. Giwa as we wind down on this, because there are millions of Nigerians who are in that bracket as well. They are not lenders, they are not borrowers, but they are like collateral damage. Mr. Giwa.
You see, that what you just read is not contractual. What you just read is defamatory, it is illegal, it is injurious. The author of such text message should be reported to the police for criminal defamation and threat, because when you have a civil transaction with a person or a company, and the person violates any of the terms of the contract, the only way to go is to go to court and pursue recovery process of how you recover your money. So for you to now send such a message, and some of them will send it even to the relation of the borrower who was not even privy of the contract, and start giving information about the person, that is criminal defamation, that is illegal, that is injurious, and it is very wrong. As a matter of fact, if there are regulations, those persons, the author of such text message, should be penalized. Their license should be withdrawn. I mean, some of them are not licensed lenders, but whoever the person is, whatever manner the contract they were executed, the person needs to be punished under the law. That is my own take on that. So whatever that person did is so wrong, is criminal defamation. they should report that person. Whether the person has failed in his contract to refund that money is a different kettle of fish. But that particular text is defamatory of the person, it's even it's criminal intimidation, and it's even an assault to the person that, a criminal charge can be preferred against that person.
Interesting. They always call these loan apps, they call them, and I'll translate from Yoruba to English. It's like putting your leg on a lantern. You know how the lantern keeps hurting you per minute. There's another one which I will not say. So let me come to consumetrics now, and ask you this frontally as well. So this practice obviously is still on, and by the way, there are loads of people who they have questions about this. But as we wind down on this conversation, what would you say is the way forward then? Because it seems we fought this battle. We've seen we won some, but of course it looks like we're losing some as well, because they seem to be coming out in droves and there is demand for them. So in about a minute, what is the way forward? People need money, but they need to do it responsibly, lend and borrow responsibly, and we shouldn't also be collateral damage.
Okay, so I think with the work we've done over time, there's been a framework and guidelines for digital lenders as we speak. If you check our website, check the FCCPC website, there are over 200 registered apps that have gone through what you can call a screening process. And this process has enabled them to identify that about 80 plus of them are on the watch list. I'm sure that the text message you read, if one is available of that platform, that loan app platform, might form part of those on the watch list for them to be delisted, with the kind of partnership that exists with Google today at the moment. Now, what do we do to all of this? I think KYC is important. Educating the consumer is important. Mr. Giwa was saying a while ago, what is contractual? To be honest, there are a lot of things that come on the platform, on our phones everywhere, that once it says terms and conditions, okay, accept, we press yes, and we move on. So when you say that text messages were sent to all the contacts on your phone, the borrower inadvertently would have said yes. Do you agree that when I want to recover money, these are yes. But what we are saying is that on top of the efforts that have been made over time now, I think there's need for a code of governance for the lenders. Okay, the full disclosure in terms of the terms and conditions, the preconditions to borrowing must be very clear, and that would also form part of what it is that the code for the money lenders, would arrive at.
That's a good place to just anchor that, because as we always say, people always go to these guys, but it's almost natural that we don't read terms and conditions. We just press agree. We're in perpetual agreement because they are convoluted. There are a lot of information. Who has time to list all of them? Maybe the regulators will help us go through these things, knowing we won't read them, so that we don't get ourselves into trouble. Because the people that are lending or collecting these monies or borrowing this money, they don't have the money to get the services of a lawyer to go through litigation. We must thank you, Mr. Amuyiwa Jimmy, CEO of Consumetrics, as well, who joined us via Zoom, as well as Mr. Victor Giwa, legal practitioner and national coordinator, advocate for people's rights and justice, joining us from our Abuja studios. Thank you, gentlemen, for coming on the program.
Thank you very much.
Thank you so much for having us.